Selling a home in a buyer's market is certainly tougher, but smart agents are still beating expectations and delivering some outstanding results. Joining us now to tell us how it's done is Bronwyn Lipscomb, sales agent with Dye Jones, and with her is the ultra-talented photographer. Ultra-talented. He insists that we call him that. Aaron Perkins of The Market Collective.
How are you both?
Hello.
Great to see you. Yeah, we have to call him that because he brings such amazing images onto the show.
We can't just say talented either. He insists on the ultra part.
That's in the contract.
Bronwyn, how tough is the market at the moment for your clients?
Well, look, it's certainly a significantly softer market than what we had 18 months ago. The days on market have extended out, and that's because we've got clearance rates now, as everyone's seeing, of 50%, sometimes in the 40s, versus the mid-80s that we had 2 years ago. So now it is very common for a property to pass in at auction. Now, prices have fallen, and we're now back at 2016 levels. What that means is that if we have an owner who bought 2 to 3 years ago and they now decide to sell, you know, either through choice or need, they're actually looking down the barrel of taking a loss.
And is that a tough conversation that you have to have with vendors right from the outset, and how receptive are they to that information?
Yeah, so I'm very direct, I'm very upfront. You know, I would rather have a conversation with an owner from the beginning that makes sure we're on the same page. And I have, you know, turned away business if I think the owner isn't ready to meet the market on price.
I presume, Bronwyn, even in that upper market at the moment, if they are perhaps buying and selling and buying in the same market, then that conversation is perhaps easier if you're explaining, well, look, you might be doing it marginally here, but it will flow onto that next property. So are you finding that as well?
Yeah, absolutely. It's about changeover. It's actually a really good market to upgrade, because that property that was $3 million is probably now around 2.6, 2.7. So the gap between where you're selling at, say, $2 million is now much closer. And so properties that were previously out of reach in terms of that upgrade are now available.
Now, you're known as a fix-it agent. But
It's an amazing title, isn't it?
not in a Christopher Pine sort of way either. What does it mean in the context of what you do in your particular patch of the Upper North Shore of Sydney?
Yeah, look, I absolutely love being the fix-it agent. For me, I love what I do, and I love providing a solution and helping owners who are stuck become unstuck. You know, so where they have had a failed campaign in the past, really understanding what it is they want to achieve and providing a solution that meets their family's aspirations. And I think in this market, there is a great variance of service and intellect amongst the agents in our sector, and you will see attrition. You will see agents leaving who, in the boom, were just order takers and now can't really cut it. And I think if you bring that extra level of intelligence and care, then it's an opportunity to really help people out.
This fix-it deal, I'm interested because it's a very big title, but as you're starting to say, it's really over a scope of things. You're sort of managing the expectations of the vendor. You're also, I presume, analysing the property itself. How do you deal with it when you're taking on a property that has been withdrawn from market from a vendor, and now you're picking up something that I could say, for one of a better phrase almost, it's been seen as bad fruit? What's wrong with it? How do you deal with that?
Look, the very first thing I do is actually assess the situation. I don't walk into someone's living room and start telling them what to do. You know, I ask lots and lots of questions. I want to know what's gone on during the prior campaign. You know, did their last agent give them detailed buyer feedback? You know, what have the buyers been saying about the property? Is there anything we need to change about the property itself to deal with those objections? Did they receive any offers? If they did, what was the best offer that they received? How do they feel about that best offer now? You know, sometimes they say, well, I kind of wish I'd taken it because the property's worth less now. We obviously delve into marketing, and I ask them how they feel their property was presented. Do they think that the advertising reached the right audience? And obviously it's about understanding their end goal. You know, what is it that they want to achieve, and is there a timeline that we have to work to?
Now, let's get into some properties, and while we do that, let's talk about the significance of the photography here, because that's where, Aaron, you really get the chance to shine. 8 Yallaroy Avenue in West Kimble. Tell us the story behind this sale and also the marketing of it.
Yeah, absolutely. So this is one of my favourites. We sold it in December. I was actually the third agent.
Wow.
Oh,
Yeah,
wow.
and so I was called by the vendor because she'd seen my sales nearby. And I hope she wouldn't mind me saying it, but she was sick of the whole thing.
Of course, I can imagine.
And she really wanted to have someone who could get the job done. So we went in there and completely overhauled the marketing, and there was a striking difference between the work that Aaron did and what was done previously. That's why I work with him.
What did you do differently, Aaron? Did you look at the previous marketing materials and could you see where they'd gone wrong?
Generally, basically, yeah, we try to. It's the same sort of thing. We look at the previous angles and maximise the space, and maybe sometimes the photographer previously hadn't done the best of work, and freshen it up, freshen the pictures up, so people who have seen the previous campaign can go, oh look, and be reinvested and reinterested.
See, a picture like that tells you nothing about the house, but it tells you how you might feel living in that
that's
house.
right.
It's completely emotive.
Yeah.
And it's an interesting point that you said, Aaron, because as we know, we had you on the show, and I've worked with you personally with client, but you talk about the angles that you take and the way that the rooms are viewed, and we judge so much online presence to come and view the property, sometimes to see it. It's such an integral thing. So for you analysing previous photos, it's funny to say, look, they got this wrong, or I could do this better, or it's a different angle.
Yeah.
The room hasn't changed size.
Exactly. I think I've been doing it a while, so I tend to get the correct angles, the perfect angles, but you need to grab somebody's attention almost instantly, because as they say, we're flicking through the properties and they need to be interested straight away in that shot.
That's right. I mean, when a buyer's looking on the internet, the very first thing they're looking at is the photos and the floor plan. And the other thing we've been doing a lot of is video. And it's just getting that deeper engagement, which is also really important for posting on social media.
And the drone work too, obviously takes the next level as well.
We thought Aaron's incredibly tall, but we know he has a drone.
Let's have a look at Sherbrooke Road in Asquith now.
Yes.
Was this one that had failed to sell for a while and you took it on?
Yes, that's right. So there was a previous agent on
I love that smile of Glenn. Tell us the story. It's great.
So Asquith is a suburb just next to Hornsby. Once you go past Hornsby, those suburbs have suffered even more than the core suburbs from Hornsby down to Chatswood, so it's a very difficult market to sell in. On this one, the owner actually called me once he saw the marketing materials and said he was absolutely blown away by the photography and how we presented
As long as you don't make it look too good, they say, actually, we're not going to sell anymore.
Is it hard to convince people, though, off the bat, that, especially if they've listed it with a few other agents first and they've already shelled out for marketing campaigns?
Yes.
How hard is it to convince them to stump up even more cash?
Yeah.
And when they're already a bit tarnished from thinking, well, maybe it's just not going to sell.
Yeah, no, that's right. And I think it is actually a good test of how much that owner wants to sell. I mean, I can't change what they've spent previously. That was past. All I can do is give my recommendation of what I think we need to do to get the job done. And at the end of the day, we're selling in a market that ranges from just under $1 million up to $6 million. So the cost of the marketing is relatively inexpensive compared to the final result.
And what was the final result there? How much?
So that one we had a guide of $895,000 and we sold it 2 days prior to auction for $900,000.
Great.
Wow.
Oh, that's nice.
Yeah.
Just edged over. That's a really
it.
nice. That's really big.
Let's head to Gordon now, Burgoyne Street, and you can ask your next question.
That's fine. We're never going to get an argument when we get to look at pictures. I'm wondering, when you look with the previous images, and here we are seeing properties that are beautifully styled. The styling of the property is so important. So, I mean, Aaron can get great shots if the things are right, and he can move things to the left and right, but if the styling is not right for the home in the first place, that makes his job harder.
Yeah.
How do you deal with that?
So this one was an amazing campaign, and it actually bucked the trend of the market. So we sold this at auction for 30% above reserve.
We love that.
Auction, everybody. Auction. And Aaron, do you ever just walk in and go, I can't work with this?
Yeah. It's a typical tough day.
But the reason was that these vendors actually completely trusted me. They just handed over control. Often a vendor will have a little bit of debate about the strategy. They said, Bronwyn, you're the expert. We want you to tell us what to do. And so right from the very beginning, in terms of doing repairs to the property so it came up well in the building and pest, doing the premier styling that you see there, fresh paint, carpet, but also getting the price guide right and having a reserve that matched the guide.
And how important is that trust relationship? Because real estate agents are ranked with journalists like me and politicians in terms of how trustworthy they're seen in all those sort of surveys. So how do you kind of establish that trust from the outset?
I think my results speak for themselves. So I can say, well, look, here's my portfolio, here's what I've achieved, and this is how I did it. So straight away they can see that my advice works. But also I think by demonstrating that I do actually care about the outcome. I'm not just there for the deal. I like to help people make a move and do what they need to do with their property.
And, you know, the quality of this relationship that you're having with these clients, it comes back in return business. I mean, there are people who buy and sell within suburbs over time, and then the referral rate. So it's a really important thing for this market at the moment. Instead of just hiding in a shell, really watching how you perform and what you present.
Yeah, I actually had a call this week from someone who's been on the market for 3 months and not sold, and she was recommended to me by someone who bought from me 2 years ago.
Yeah, great.
So, yeah.
Yeah, and you can't afford to muddy the waters when you work quite specifically in one area, can you? Now let's have a look at Kangaloon Road in Robertson, Aaron. This is a campaign you've worked on recently. What's the backstory here?
This is a new one, and they had some previous images that weren't quite enough, so they've called me in to take a few more to entice some new buyers to the market.
Do you look at them and think, well, how could you stuff that? How could you take a bad picture
in the back there? That's the chicken run in the back, which is about as big as my house. It's a stunning property.
Your catchphrase, the grass is always greener.
Exactly. Oh, yes. I mean, I could walk around, I could spend a day shooting there. It's just stunning.
But could you take a bad photo?
That's right.
On your iPhone?
Yeah, but look, I mean, I'm looking at these images now, and from a professional point of view, these are, I could put printing on the top of that, and that could be a cover. So this is really magazine quality. Without patronising you, I mean, we know you do a great job, but there's a reason why you're following. Explain for people watching, you know, you look for natural lines that are happening in the image to get the angle.
Correct. It needs to be graphic, it needs to grab you, it needs to put you in the spot, it needs to be a punchy image in order to really go. That one there is perfectly square. You've got the fireplace, you've got the beautiful light coming in through the window in the back. Here you've got the beautiful old bar and your out of focus chairs, so you put yourself in those seats.
Mad Men or something.
You know, it's this all the symmetry and
storage. So I also like when we've spoken to you, and also for you, Bronwyn, too, when these images, they're selling a pretty story, right? But they're actually saying more. This image is about a great room and well styled, but it's also, my eye is noticing space and bench top and storage and all of these key words. So do you two discuss these points when you're getting a brief? How does that work?
When we get to a property, Bron will have a sort of an idea of what needs to be done, and she'll tell me how many shots we need, and we'll have a look around and discuss, you know, look at the back of the camera at some angles. You know, I might shoot 5 angles of the kitchen, and then we'll work out which ones we like. And
I'm a control freak.
Which we like.
Look, not all agents attend the photo shoots because they think, oh, it's just a menial part of the process, but to me it's so vital.
It is.
And so I'm there every single time and overseeing it all to make sure it's all the way I want it.
So we get it right, and because Bronwyn looks from a real estate a sales perspective, I sometimes just look at it from a pretty perspective, and we kind of meet in the middle as well to grab people. So it's good. So we're a good team.
So this is encouraging, isn't it, for people who are out there feeling this is a down market. I'd like to sell at the moment, but I don't know how to make the most of it. But you can still get some great results in this kind of market.
Yeah, absolutely. I mean, the best way to describe the market is that it's patchy. So we do see some extraordinary results like Burgoyne Street and Gordon. Now, that's not the norm, but the good news story is you can get sold if you approach it in the right way.
But if you don't have good marketing, you're probably going to struggle.
Yes. Absolutely.
Yes. Yeah, we all want to be presented at our best, and so do the properties. Great to have you on. It's very exciting. We're going to be running that with the caption 30% over at auction. I think we're going to ride on that all year. But it's also a great combination of providing the right services to your clients. So congratulations, well done. Great to have you back on the show.
Always
to Aaron, and always beautiful to look at your amazing imagery.
Thank you very much.
Thank you.
It's time for more Auction Day on Your Money.
Great to have you with us. Now, it's easy to see the appeal of Queensland's capital city. Great climate, transport, restaurants and some truly amazing homes, which seem affordable, especially when compared to the East Coast capitals.
Yeah, that's right. But despite its obvious assets, Brisbane's property market has failed to take off and has had slow, steady growth rather than any big booms or busts. Steve Waters from Wright Property Group is here to break down the fundamentals underlying the city's housing prices. Steve, thanks so much for being with us. Great to see you.
Pleasure.
Now, we hear so much spin about Brisbane. We have, you know, people spruiking different parts of the country. Brisbane is one of those ones that comes up, and we've even heard people say, oh, double-digit growth this year.
Yeah.
But it just never quite seems to happen. Why is that?
Look, I think it's really had some hurdles over the last decade. Really, we had the mining boom that fell apart, tourism fell apart. But I think probably the most puzzling part of it is why it hasn't achieved the growth, and I put that down to finance and private money infrastructure spend, and also, of course, jobs growth, because where there's job growth and there's infrastructure, prices will follow.
But as finance has affected everyone, why more so in Brisbane?
I think it's more of a confidence piece, to be honest with you. Obviously, Sydney and Melbourne had that tremendous double-digit growth, and as the confidence and the wind was out of the sails, people were just a little bit more hesitant to shift their money elsewhere, even though the fundamentals might have been there in Brisbane.
You've also seen a lot of people being drawn up from Sydney and Melbourne and investing up there. We've got an example to look at. It's Queen Street. What was the story behind this one?
Well, look, it's no secret that there was an oversupply in the unit department around the Brisbane CBD, and we saw a fluctuation in price quite dramatically where prices contracted. Yet on the other side of the scale, there's been pockets throughout Brisbane which has had some pretty phenomenal growth, somewhere near the double-digit growth.
Now, so this example that we're looking at now, this is a two-bedroom apartment in Queen Street in Brisbane, which is, you know, central CBD.
Great location.
Great location, but it's it hasn't really done much for anyone who's invested in it over the past sort of several years. I think we've got a graphic that shows the, you know, where it's been. So it was originally purchased in 2002 for $437,000, but it's, you know, it went up a bit and then has come back down again, and that's sort of the picture that a lot of people feel sums up the Brisbane.
The Brisbane market.
Apartment market.
Yeah, oversupply once again, and yeah, there's been some. The first initial owner had some a little bit of growth, but the second last owner certainly lost a little bit on the way out.
Definitely.
And once again, it's an oversupply scenario.
And so that is a story that's been told all over Brisbane, is it? That's not an anomaly?
No, not necessarily. I mean, look, maybe around the apartment market, but certainly not around the house and land market, especially as they get out to those fringes. There's been some pretty good growth, and it's actually quite a resilient market, all things considered. With the lending environment, consumer confidence and what have you, you would expect that there would have been a lot more contraction on growth, but there are some areas that have had 8, 9 and 10% growth over the last 12 months.
Let's have a look at private investment then, because you've got a graph that shows how much is being spent nationally in terms of private investment, and there's a big chunk of that is going into Queensland, isn't it?
Well, it's one of the most important fundamentals for investing is what that private infrastructure spend is going to be. And of recent, there's up to $25 million worth of private infrastructure in the pipeline. There's the Cross River Rail, there's the second runway, there's the Metro redevelopment, there's the Queen's Wharf redevelopment, and all of that...
billion, is it?
Billions,
yeah,
sorry, not millions, billions.
That's pretty cheap for a railway.
B with a billion. Yeah, but with that brings jobs, and when we have jobs, we have employment, and then the growth in prices is there.
Mining has also been a big driving force in Queensland in particular.
Yeah.
How's that flowed on or not flowed on to
Well, it didn't.
Brisbane?
It stopped dead. A little bit like WA, that whole trickle-down effect of the mining money stopped quite abruptly, as we all know. And you know, looking at the graph, we can see that it just dives very, very quickly. But that private infrastructure spending...
It's a big peak. That's the
it
grey
is.
There that's dropped right down.
It is, and I think Brisbane's transitioning from its traditional pillars of tourism and mining into more of a professional and service-based economy, which is what they really need.
I guess with Brisbane, one of the things that concerns people often is that it seems to have the ability to just keep spreading out, whereas in Sydney, you know, we're bordered by the harbour and the mountains. In Melbourne, you're sort of tightly, you know, surrounded by other cities and by water. But Brisbane just seems to be able to keep sprawling, and that might explain our next graph, which shows what growth has been in Melbourne, Sydney and Brisbane.
And I think and that's a really, really good point. The thing that Brisbane does have going for it, even though it can sprawl, is that there are pockets of flood affection, and so what that does is create little island communities, so to speak, and I think that will help with the growth as we go along. But
see, we're looking at, you know, that's Brisbane, that green line at the bottom.
Yeah.
There. That's you know, Melbourne and Sydney are the other ones which have sort of peaked and are now coming off a bit. But in the same over the same time span, over the past 10 years, Brisbane's just kind of...
It just hasn't done enough. It's not reached expectations to perhaps what the investor... But as we talked about earlier on, it's the magnet now for interstate migration, and once the population starts to grow, we should see an uptick. But once again, it's all going to come down to the availability of finance. Everyone can go there, everyone wants to buy, and I'm being quite general, but if 10 people want to buy and only 5 can get finance, well, that takes demand out of the market, and that is the bottom line.
There's the median growth graph now, and it's almost flatlining.
It is.
It's really quite amazing to see when you start to look at the data figures, just how it really hasn't moved at all.
Well, it hasn't, according to the data, and I think this is where data's a little dangerous. As we said earlier on, there was an oversupply, and when you have a contraction of price on one end of the market or a certain type of asset class and growth in another, well, it just averages out. And there are pockets of Brisbane that are actually doing quite well, but it's not ever going to replicate Sydney or Melbourne.
And a lot of that internal migration that we're talking about to southeast Queensland as a whole, so a lot of those people, yes, some of them are going to Brisbane, but some are also going to the Sunshine Coast and the Gold Coast as well, aren't they?
Well, it's a lifestyle piece, isn't it, really? It's warm, it's friendly and it's relaxed, and I think it is now the mecca for that interstate migration. It's overtaken Victoria as the #1 position, but most of the people are actually coming from New South Wales, and it is that lifestyle, but it's also affordability piece as well.
The beach drivers, particularly, we've spoken on the show quite a bit about the baby boomer market. There was a lot of money to invest, and they're moving to what was their holiday destinations. For everyone else moving, it's got to have employment. So how do the employment figures work in Queensland in relation to...
Look, employment has been a little soft, and that's one of the other key fundamentals, but it is starting to pick up. With all those infrastructure projects in the pipeline, that needs employment. And hopefully Brisbane will get that, because if you don't have the employment, you don't have asset growth. It's as simple as that. And
what will drive jobs in Brisbane? Where are the jobs going to come from?
Well, once again, private money infrastructure, all those development pieces that are in the pipeline, and some 85% of the projected jobs growth is actually going to go to that southeast corner in and around Brisbane, and I think that's very, very important. Yes, so we're looking at job growth now in Queensland over the past 15 years.
It's tracking back up again?
Yeah, it is tracking up again, and it is quite, it's quite peaks and troughs, really, but I think that's the general nature of Queensland as a whole. We did come off that, well, Queensland did come off that mining boom, and it saw a mass exodus of population into perhaps some of the southern states, and now we can start to see the growth pick up, and hopefully that means more money within that, in the local economies.
Steve, you've given a figure now that we've got a graph for land value, which is... It's sort of gone up, but it's not being related to, property prices. Yeah, and to me that it's such an interesting graph, because whilst the cost of land has gone up, the block sizes have also fallen. And I think from 2008 up until now, there's been a 130% increase in the per square metre price of land. And if you overlay that, if we got a little bit sort of into the data, if we overlay that with a dropping dollar and the cost of construction materials, therefore putting upward pressure on price of construction, well, to accommodate the population growth, we might see an upswing. But I don't think people should go to Brisbane and hang their hat and even expect to get Sydney's and Melbourne's growth, because that's just not going to happen. And Sophie made the point of Brisbane seeming to go out, whereas very much Melbourne, but Melbourne and Sydney went up. Correct. And it's really relating to that. It is, and I think, and hopefully people might have learnt their lesson from Brisbane and from Melbourne and Sydney, and realised that it's not a confined area, as we say, like Sydney is, or even to a degree Melbourne, and that there can be that sprawl, that continual sprawl, but you need the infrastructure as well. If you don't have the infrastructure, you might have a suburb without any rail, without any shops, without any schooling precincts. You're sitting in traffic for an hour and a half like we do in Sydney. Yeah, very true. What fun. Now, are you advising people to buy in Brisbane at the moment, and whereabouts? I mean, you help people spend their money all over the country. If somebody says to you, I want to buy in Brisbane, what do you advise them? Look, it really depends on their unique circumstances and what they already have. If they're trying to expand their property portfolio, well, then that diversification is also risk mitigation. I think for the long run, and we're always
looking at the long term, Brisbane has the fundamentals. That pot of fundamentals is starting to percolate, and that's what we need. It's better than money in the bank, but it also comes down to affordability. And at the end of the day, if you can afford to invest money, whether it be property, shares, bananas, whatever it may be, do the diligence and act accordingly.
You can see why people are losing the faith a little bit, though, can't you?
It's a confidence piece, and I heard a really interesting expression the other day. There was FOMO to get into the Sydney market, which was probably 20% of its price rise, and now there's FONGO, the fear of not getting out. Yeah. And that's I know it is a new one, and that's playing or wreaking havoc in people's consumer confidence and the wealth effect.
And also, do you see the figures now with the accessibility to finance? We've had the Banking Royal Commission come where they're trying to, it's all being dumped on the poor mortgage brokers, but particularly with the younger crowd who are being driven for, I'm moving north, I'm going to have an amazing lifestyle up in the sun and therefore buy a property up there. Do you think that that's going to be starting to lift as a driving force for you? Or
I think it will. I think it will, but nothing to shift the data dramatically. I think it'll be a slow effect, and people are moving there because of affordability. It's half the price of the Sydney average. As we said, it has a lifestyle. But once again, if you don't have the employment to cater for these people or the population growth, it really means nothing. It won't transition into growth. But finance is the key. It's the key to every state and territory in terms of price growth. And unfortunately, Brisbane just seems to be, just as it starts to emerge as a market, something happens. But if we could do a seasonally adjusted number on Brisbane in terms of growth, it's actually been quite resilient when you look at the other states and you overlay that with the finance pressures.
Their graphs are much more dramatic, aren't they? Whereas Brisbane sort of it looks a lot safer. So let's take a look at a more positive case study now. In Strathpine, this has been an investment property for someone? Yeah.
Well, I think originally it was a home owner-occupied property. But what it shows is that there are pockets within Brisbane that's doing quite well. And
Strathpine's right up in the north of Brisbane, isn't it? Just near the highway to the Sunshine
Correct,
Coast.
And it's probably 40 minutes or thereabouts from the CBD of Brisbane. But I think it's had around about 8% growth over the last 12 months. Now, when we look at the other data, which has showed it flatlining, once again, there are pockets that have actually outperformed the market, so to speak. But that growth is based on infrastructure. You have the universities, you have the freeway, you have the railway line there, enough to accommodate a growing population, and it's affordable as well. So as a result of that, the growth has been actually quite steady.
Yeah, look at that price in 1997.
It sold for $102,000. Someone tried to sell it in 2010 and couldn't, and then made a nice little profit in 2018.
And that's quite a reflection of the economy at those certain peak times, 2010 and of course now as well. Not a bad earn.
There we go. See, it's as Bronwyn was saying, a previous guest, it's the market's patchy, isn't it? And you can pick a patch that's turning, but that's why we're here all day talking about it, because those things are hard to pick sometimes. Steve Waters from the Right Property Group, thank you so much for your time today.
Thank you.
We're going to check out our first live auction of the day now. It's a supreme Spanish-inspired family house in a sought-after area of Greenvale, Victoria. This is 12 Maguire Court and it's heading under the hammer very soon. Now we're joined by Ray White selling agent Malik Yunan for a preview. Good morning to you. We love this home. It's very unusual for the area, isn't it? This sort of Tuscan-inspired villa almost.
Yeah, it is. It's actually a very, very charismatic, full of character home as well, which you don't get much in Greenvale. You do, but something of this level, you're pretty much thinking you're in a different country when you walk into this home. So full of character and, popular demand.
Family home, 4-bedroom, 3-bath and 2-car, and 612 square metres is pretty typical of the houses on either side of it or in that street, Malik?
Yes, in this street, correct. There are some blocks that are probably exceeding that at 750 or 800 square metres. But generally, in Greenvale, generally you get larger blocks. But this one here, this allotment's only 612 square metres. But yeah, full of character, which is where it's drawn a lot of attention to the home.
Now, it was an owner-builder who created it in the first place, wasn't it? He obviously had a fairly unique vision for the area. Is that appealing to people, its uniqueness?
Absolutely, absolutely. That's what's. I think that's one of the major things where it's got the crowd happening. You probably can see the people behind me. It's had over 140 inspections. Generally, we get 40 people in a month. This has got pretty much over 3 times that amount.
The presentation's also on point. I mean, if I'm correct, it was built in 2000, but they've really done a great job at styling the property to keep it looking nice and fresh.
Correct. So it's pretty much half the owner's furniture, and the rest we got styled for the vendor, just to put the finishing touches in and make sure it's always on point for our auction.
And can you give us a bit of a snapshot of Greenvale? What kind of area is it? I presume there's very much the family buyer that will be shopping around here today?
Correct. So you've got family members, families usually that would come and attend auctions in Greenvale. You also got young couples, professional young couples, but majority of our demographic down here would be young families into mature families, and then you've also got the young professional couple that would like to come into this market. It's got good value for money as well, and it's something that's always sought after, especially close to all amenities here too, which is a big bonus.
Now, I'm wondering, with your marketing campaign, you've got the property, its attributes, it looks great, you've presented it well, but you also listed in the description that you've got a barista van there giving complimentary coffee. How's that gone for you this morning? And we could smell it from here. You should have sent
can
one.
we have one too? Yeah.
Absolutely, you're more than welcome. Yeah, so we do that as part of Ray White Gladstone Park. What we do, we sort of give back to the community as well in terms of when we do auctions, and that's just something small we've done for many years, and it's something that always people appreciate, especially first thing in the morning, first auction. It gets people buzzed up and make them feel at home.
Yeah, hopefully gets those elbows greased so the paddles go up as well. Malik, you are also our auctioneer today, if I'm correct.
That is correct. So bit of pressure, but I think it should be good.
That's all right. Well, you make sure you grab a coffee too. We're looking forward to a good auction coming up very soon.
Thank you so much. Looking forward to it.
Let's hope he has a good, strong coffee and we get a good, strong auction.
I think so. I think it's good. It looks good. Great presented property.
Yeah, it's beautiful.
It's got that Spanish feel, but it's not too sort of chintzy. I think they've done a really good job. And I liked how he spoke about the agent being involved in combining the styling. I think we're seeing that a lot more, aren't we, with agents being involved, sort of up in the ante of what the agents deliver as their service. Really good.
Absolutely. Can't wait for that one coming up very soon. Australia's mortgage broking industry is understandably outraged following the Royal Banking Commission's recommendation that commissions to brokers be axed and be replaced by an upfront fee. But just how much in commissions are we talking about?
To help us understand just how much mortgage brokers are getting paid and how much impact this will have on the recommendation if it's upheld, we're joined now by Marissa Schultz, Director of Rise High Financial Solutions. Marissa, great to see you as always. Thank you so much. It's been interesting things in the space with the mortgage brokers. They seem to have taken a lot of the brunt from the Royal Commission.
Absolutely. It's been an interesting couple of weeks, definitely. We weren't expecting that recommendation to come through, so it's certainly been an interesting couple of weeks.
Now, what is the reality then for brokers? Can you break that down for us?
So the Haynes Royal Commission report has recommended a consumer pays model, which basically means that he's recommending that Australians pay for the service that they receive from mortgage brokers, and instead of the banks paying us and Australians being able to access a fee-free service, Australians now have to pay an upfront fee to mortgage brokers for the service they provide.
And do we know how has that fee sort of worked out? What are they, I mean, how is that being, is it a flat fee or is it a per property fee or?
Yeah, so at this stage there's still a lot of unknowns, but what we need to understand is that currently we're in an environment where all Australians can access mortgage broking services on a fee-free basis, which means we're able to help every single Australian. It's also the case that it's the same cost to access a mortgage broker as it is to go directly to the bank. So all Australians currently have the choice of which channel will serve them best in making their decision as to how they proceed with their home loans. And clearly we can see that Australians love and value the service that mortgage brokers provide. You know, now 60% of Australians are using mortgage brokers to organise their home and investment loans. and are voting with their feet, we also see that 9 out of 10 of those are very, very satisfied with the service. If we went to a consumer fee pays model, we run a few risks because customers could potentially perceive that mortgage broking channel will be more expensive than going directly to a bank with a branch. What that might mean is that more consumers will leave mortgage brokers and go directly to banks with branches, which would ultimately mean that there would be less competition in the market because the smaller lenders that only have mortgage brokers as a distribution channel would get left behind. Less competition in the market would ultimately become a problem because it would mean that the margins or the big banks would have more power, and with more power they would have the ability to increase their margins. Long term, we'll see that all Australians would have increased interest rates and increased fees on their mortgages. So this is clearly something we want to avoid. I guess the other concern that we have, the other risk that we see is that a lot of Australians who need us most are the people that can't afford our service. So we're talking about the first home buyers, you know, the people that are in financial strife, that are trying to get their life back on track, people that are going through difficult periods in their life, for example, losing a loved one or going through a relationship breakdown. These people desperately need our help, and they need our help for months, if not years, before they're ready to do a loan application, and they don't necessarily have the money or the equity to be able to pay us that fee. So the service will no longer be available to the Australians who need us most. And what we're also going to see is that even those Australians who can afford the fee, which could be multiple or several thousands of dollars, may end up becoming mortgage prisoners to their existing banks because the cost to refinance or change their loan or move their loan will be so great that they'll just be willing to pay an extra 1 to 2% more, even though they're getting ripped off because it's too expensive to go to another bank that's going to offer them a much cheaper interest rate. So it will present a situation where all Australians will end up paying more for the service and more for their loans, and some Australians will miss out on the service and access to the loans altogether.
Presumably the banks don't want this either, because while they might like the customers who are locked in long term, they also do well out of the people who do refinance and shop around for a better loan. They get a lot of business that way too. So this could in effect have a bit of a backlash for the banks too.
Well, if the consumer pays model is implemented, our research has suggested that the big banks with the branch networks will benefit because they will see an increase in market share because more people will be driven to work directly with the banks with branches. Now, what that's going to mean is that the banks without branches, and there are many of those, will suffer and will lose market share. As that happens, we'll see competition reduce. So the big banks will have more power to increase margins, so ultimately it'll be great for the big banks with the branch networks, but it'll be very bad for the banks without the branch networks that do rely on the mortgage broking channel to distribute their loan products. So
and
that's
banks have offloaded so many of their branches too. You know, even the big banks have much less of a street presence than they used to have.
Well, that's absolutely right, because as you can see, Australians are voting with their feet and more Australians are choosing mortgage brokers. And there's a clear reason for that. I run a mortgage broking business. We do provide so much more value, service and support than a bank branch staff member could ever provide to a customer. We're there to visit their house after hours. We're there, any time of the day, any day of the week to answer their calls. We're there to help them for often weeks, months, if not years, before they're actually ready to lodge a loan application to really do what's in their best interest. We work for the customer, whereas the bank works for its shareholders.
Look,
so that's why, that's why clients have been choosing mortgage brokers, and that's why banks have been closing branches.
I've personally used a mortgage broker, and I find it important, especially for people self-employed, because they really need some things pointed out. From the point of view, though, there are misconceptions as to how mortgage brokers are paid and how the commissions are worked out. So how can you explain how that's being done? Because, you're obviously all multi-billionaires. That's how it's sort of being portrayed.
Well, that's far from the truth. The reality is that the majority of us are small business owners and we run small family businesses. And a recent independent study that was done by Deloitte shows that the average income for a mortgage broker across Australia is $67,500 a year. So clearly, you know, it's not this perception that we are all millionaires. We're really just small business owners trying to do the right thing by our clients. And the reality is we have no choice but to ensure that there's great client outcomes, because our clients are our lifeblood. You know, that's what we rely on. The way that we get paid currently is that the bank pays us a commission, and it's pretty similar across the board, across our lenders. We've got 60 lenders on our panel, and there's very little variance across the commission rates. We get paid an upfront commission for the purpose of presenting the loan to the bank and taking it through to settlement. We only get paid that upfront commission if the loan actually settles, and that upfront commission has to be repaid back to the loan if anything happens during a 2-year period, like for example the customer goes into default, or the customer gets a divorce, or someone dies, or the loan has to be refinanced. We actually have to pay, almost with many lenders, 100% of that upfront commission back to the bank. The other commission that we receive is an ongoing trailing commission, which is a very, very small percentage of the loan balance minus any offset funds. So this trailing commission once again gets paid if the customer is meeting their financial obligations, and this trailing commission allows us as mortgage brokers to provide ongoing service and support to our clients. For example, in our business we offer free annual reviews to all of our clients where we review all their loan facilities, we reprice their facilities with their current bank to try and get them a better discount and a better interest rate and keep the banks honest long term. We're also there anytime they need to provide advice about, you know, switching their repayments, switching their interest only to P&I, their fixed rates, their variable rates, and we basically, you know, provide that backbone to helping them through any scenario that they have during that period. So that's how we get paid, basically.
What about bonus commissions?
Yeah, so the industry has been moving away from bonus commissions, and the industry, you know, whilst 9 out of 10 consumers are extremely happy with the service they receive from mortgage brokers, and as an industry we're always continuously trying to improve, and that's why over a year ago we set up the Combined Industry Forum. And that's a forum that has looked at every aspect of the industry and trying to self-regulate to ensure that everything that we do, and our remuneration structure, but everything else is in line with consumer outcomes and ensuring the best possible consumer outcomes. As part of that Combined Industry Forum, there has been a move away from bonus commissions, and we're seeing now that no bonus commissions can be paid that impact customer outcomes, and we have seen that start to shift. Now, that Combined Industry Forum was set up well before the Royal Commission took place, so you know, as an industry, we are taking it upon ourselves to try and ensure improved outcomes for our consumers, because we want to see, you know, we want to see our consumers really benefit from our services as they have previously.
So, as you said, it's obviously affecting people like first home buyers or somebody to get in, but there can be an argument that people then paying the commissions up front and the money's up front sort of takes away that worry of the ongoing commissions anyway. So people are still paying for a service that they're getting anyway, but it's the matter, you're saying that it's a negativity to people not wanting to pay that figure up front.
Well, so no consumers are currently paying for the ongoing fee that we receive as trailing commission. So just to put some perspective around this, for an average $300,000 loan in South Australia, you know, we would get after GST about $1,600 up front, and we'd get an annual income of about $370. Okay, so the consumer actually does not have to pay a higher interest rate if they use a mortgage broker. So the bank is absorbing the cost of our commission in their loan. And the great news for the consumer is that they're not paying any higher interest rate. In fact, often using a mortgage broker, because we do have access to choice and we do have negotiating power, we can often find the customer a better deal and a better interest rate. So ultimately, currently, with the current remuneration structure, everyone is the winner. The first home buyer gets to access our service. We get to help them for months on end to try and get their deposit, to get them into a position where they will be approved for a loan, but they don't have to pay for that service. We have access to lenders that have policies that are a lot more flexible than the big four banks. that will get these people into home ownership sooner at a rate that is comfortable for them, at an affordability that they can, afford long term. So currently everyone is the winner. If we move to a consumer pays model where these people have to pay us a fee, these first home buyers are struggling to get into the market even at a 95% loan to value ratio, and they're having to capitalise tens of thousands of dollars of lenders' mortgage insurance on top. You ask these consumers, these first home buyers, to save an extra few $1,000s, and that just puts them out of the market. They just can't do it. Plus, they're going to end up having to pay, if they do capitalise that fee onto the loan, for example, they'll be paying interest on that extra fee over a 30-year term. Clearly, that's not a good outcome for them, and it's going to cost them a lot more in the long term. So our fear is that there will be a lot of Australians who will not be able to access our service if there is an upfront fee charged, and we're very doubtful that the big banks will pass on any savings. What it's basically going to do is allow the big banks to keep the money that they would have ordinarily been paying us and pass that fee on to the consumer, which, quite frankly, we don't think is fair, because the consumer is our first concern, and we want to make sure that all Australians have access to a fee-free service where they can get their finances in order, achieve their financial goals, and we're the people that can help them to do that.
Marissa Schulz, thank you so much for that. Obviously, still a lot of variables at play, and none of this is set in stone yet, but let's you keep up the good fight there, and we'll check back in with you soon. Thanks, Marissa.
Thank you so much, Marissa.
Thank you.
I think it is time to go to Bronte now.
Beautiful.
That auction is finally underway. A beautiful Federation 1905 house that's been held lovingly in the one family for over a century. 2 Gipp Street in Bronte is heading under the hammer now.
For your competition here this afternoon, and the turnout and the number of registrations is a testament to the value that's being offered here this afternoon. This is a home that has been held in the same family for over a century of ownership in one family. That tells you about the tightly held nature of this particular pocket and how well loved this home has been throughout the generations. Beautiful period features throughout. Of course, you've got the exposed stone on the external areas, beautiful timber boards throughout, 4 bedrooms of accommodation there, and of course, all importantly in this location, off-street parking. It's a grand old dame. It's been beautifully presented by our vendors. There certainly is plenty of scope to add value, potentially to go up or out, subject to council approval, and build your own dream home. But it is just delightful the way it is. Buyers, you're here to own it. Number 2 Gipp Street in Bronte. Where would you like to see it start away? Opening bidder offer. Where do we start? 3 mil. Wow. Okay, we started away at 3. Welcome, ma'am. It's good to see you. Throws a shot across the bow to one of the buyers at $3 million a start there at 3 the call, and call it back at 3.50 now if you will, but at $3 million a call. At 3 a bid now, at 3 the call now, and we welcome our other registered parties in at this point. This is your time, this is your cue, nothing to wait for now. It's time to open your account at $3 million a start there, and it's a good strong start, it's a good move for the keys early. We appreciate your strategy, ma'am, at $3 million, and surely good buying in it at that level, buyers. Have a look around what $3 million buys you in the local area, and I'm sure you'll see value here at 3 the call now, at call it back at 3.50 or 3.25, a gentle quarter if it makes you happy. But at $3 million the bid now, bids right and 25. At 3.25 your competition identifies himself. Say again. 42. 42,000 on top. Okay, no worries. 67. Going to play those sort of games. All right, no worries. 3.67 the call, sir. Perhaps it's 3.1, a nice round number for you. But at $3,067,000 the bid there. 3.075 at 3.075. What would you like this time, ma'am? At 3.075. You know we trained for this, right? At 3.075 the call. At $3,075,000 the bid. Bid's left-hand side against you now, back in second place. Sorry? $3,092,000. Precision bidding there at $3,092,000, sir. Perhaps round me out $3,120 if you like, but at $3,092,000's here. 3,105, no worries, at 3,105. Look what you've started at 3,105 the call. At 3,105,000, a bit of 3.105, 3,125, a nice even one just to change it up. What do we say? At 3,105's there, your opportunity now, ma'am. Game of 2 so far. What do we say? Surely not done at this level. At 3,105,000, sure. Silence is not a strategy for success, unfortunately. At 3,105,000, a bit of 3.105, and I call it up now. First opportunity at 3,105, twice now at 3,105, third final time. Is there any better bidder offer, buyers? At 3,105,000, surely at this level. OK, we're going for phone a friend, sir. Appreciate your patience. You're in the box seat, sir. We give you the same courtesy. At 3105, the bid now, a game of two. We welcome our other registered parties in at this point. Anytime you'd like to join us. Some parties we haven't heard from as yet, and I'm surprised. Unfortunately, you can't purchase it with the card in the pocket, buyers. You need to use it here this afternoon. Your time is now. How are we travelling at 3105? Where do we move from here? We'll have to do via text. We're doing it the slow way. Wow, patience. Nerves of steel there, I'm sure, sir. At 3105, he looks comfortable and confident, and why would he not? Buying into such a great pocket, a great location, a lot of scope here, beautiful home. We're just a short stroll to Charing Cross, of course. You've got to wander down to the beach down in the other direction. You've got the major hub of Bondi just not far away in terms of shopping. You've got dotted cafes throughout the local area and a couple of local bars. Of course, well-liked local schools, prestigious private schools in the eastern suburbs. So you've got a wonderful family environment here. It's a great opportunity at $3,105,000. I would have thought still very good buying in it. What do you do with your dream home in this location, buyers? At 3105, it's a great entry point to the Bronte market. At $3,105,000, man, we will need an answer at some point. At 3105, the call bids left-hand side. We appreciate the position at 3105. We search for an increased bid above that at 3105. We call it away. How do we stand? At $3,105,000. Do we see a rise above that? Surely good buying in it still here. 3120, 3,120. Just confirm with the card there, ma'am, if you wouldn't mind, at 3120. What about a strong one, sir? 3150. 30. OK, no worries. He responded in kind. It's a cheeky 10, ma'am. It's a drop in the ocean at this level at $3,130,000. A bit of 3.13 bids left-hand side. Surely we're not done yet at this level, but at 3.13 regains the ascendancy there, and I look for your rebuttal at 3,150 if you will, but at $3,130,000. Again, I call it up once at $3,130,000, twice now at $3,130,000. Third final time. Any better bidder offer? The hammer rises at $3,130,000. How are we travelling there, ma'am? Anything left in the tank, are you sure? Only two ways to nod that head. That's not the one that earns you ownership, unfortunately. At $3,130,000. Moments for pause. We certainly need to hear from other registered parties if you're here to own it today, buyers at $3,130,000. Gentlemen in the box seat. $3,140,000, just confirm with the card. Then again, if you wouldn't mind, $3,150,000, sir, this time. Perhaps a stronger one if you like, but at $3,140,000's back in front there. 45, shortened him up, could be a sign for you, ma'am. Don't know whether that's a signal or not, but it's 3,145. Say 50, surely we get to the round number first. At $3,145,000, a bit of 3.145. A lot of people set limits at 50. There she is at 50, sir. 55 and still going, and why would he not? At $3,155,000 and still value in it there. At $3,155,000 the call. 60 at $3,155,000 bids left-hand side now. Against you now, ma'am, against my opening bidder with the left at $3,155,000. 60 it is, and 65 or 75. So what about a stronger bid? Stamp your authority on it. 65, 65 still going in the fives. We keep the pattern going. Your opportunity, ma'am, 70 if you like, or perhaps a stronger one would be my recommendation. Might need something stronger than those fives to close it out here, but at $3,165,000 bids left-hand side. 70? 70 it is. And she said, sir, need a stronger one. What about 80? 75, all right, we keep going. I had to try. 80, still there at 80. 85. 85, sir, your opportunity. Don't miss it now at $3,180,000. Still great buying. Think about the next one you'll be buying in Bronte. If it's not this one, it'll be at a much higher price point than this at $3,180,000. Phone a friend. Well, we're going to give him the same courtesy we gave you, ma'am, at $3,180,000. I certainly hope that friend is not the bank, because they're not the most speedy answerers. At $3,180,000. Bids right-hand side with my opening bidder at 3.18. We'll just take moments for pause here, give all our buyers the chance that they need in terms of having an opportunity to purchase. And again, I underline it, buyers. We need to hear from you if you're here to own it. If we've got parties waiting in the wings, you'll need to throw your card up if you're here to own it today at 3.18. The bid's right-hand side at $3,180,000. $3,180,000. I'm going to suggest, sir, can I be bold and suggest a move to 3.2? You done? You sure? For $1,000 I'll put you in front? At $3,180,000. Happy to miss today, sir. We appreciate your bidding today at $3,180,000. That could be good signs for you, ma'am. At 3.18, I call it up now once. At 3.18, twice. At 3.18, third final time. Is there any better bidder offer? The hammer rises, buyers, at 3.18. Alex, how are we travelling? We got anyone sitting in the wings? Happy for me to sell? At 3.18, well, fair warning, buyers, in the absence of a better bid, I'm going to sell it. So if you're here to own it, you need to beat me inside of 3 calls at $3,180,000 once, twice, third, final time. It goes now. It goes. Sold. Congratulations, man. Well bought. Congratulations to our purchaser. Thank you very much to our underbidders, and on behalf of Alex and the PPD team, thank you very much. Have a great weekend. Hey, good to see you.
Wacko. No mucking around with that auction.
No, what a great auction there from Clarence White, our auctioneer today in Bronte. Fantastic result there, 3.180 for a beautiful 4-bedroom, 2-bathroom house in the beachside
Bidder number
suburb.
13 by the looks of it, right there in the middle of the camera there with our beautiful camera crew on site. Clarence White was the auctioneer there, and he went very smoothly. There was no mucking around right from the beginning. First bid, $3 million. And then we went up by small increments. A couple of really odd bids, which was great for the maths. There we go, we got it sold. And I love the sense of humour there from the auctioneer, talking about the figures, the small amounts, the weird odd numbers that were being bidded. And that was just sort of a bit of a play between two people trying to throw each other off to really secure this property.
Absolutely, and look, the CoreLogic value estimate was 3.1, so it was sort of right on what the presumed sort of value for that.
$3,180,000, beautiful corner block. Now they can walk down to the beach there and have a dip and think, wow, this is going to be my new home. What a great location.
Yeah, absolutely.